Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on Friday, 21st of April, between 5 and 5:30 GMT. I'm going to review during the Asian session live market analysis and the forecast webinar. The forecast, what I given it for this week, 17th to 21st of April, and try to recollect what had happened during this particular week and understand the reliability of the forecast and also try to see what the market could do for the weekend. My contact details are given here. My email ID, dr@iknowindices.com, Skype chat ID, iknowindices@hotmail.com, and website is i-knowindices.com. So if you want further clarifications or any other input, you're free to contact me, and there won't be any trap. I'll be willing to help you. As far as my trading system is concerned, there are three components involved: the derived forecast, the market reading, and the trading strategy. So the derived forecast, I give it during the Mondays of every week during the Asian session live market analysis webinar, and that is derived based on a sequential statistical analysis which is referred as algorithm. Then that forecast is fine-tuned using the market reading technique. So this I am giving to you because you yourself can fine-tune the forecast by noting down the initial lows and the highs around 3:30 GMT and find out what the players are trying to do in the market. So using the forecast and the market reading, we should be able to trade at ease. In the event, if there is a knee-jerk reactions in the market, then we may have to go in for a trading strategy. That is, limit the risk and maximize the profit. That can be done with the help of the hedge order. So in the MT4 trading platform, we come across the buy stop and the sell stop orders. And once you use them, suppose you have got a buy position, if we use the sell stop, if it is filled, then both the position will be in the platform. So they will not offset each other. But if you use a normal stop, that will offset the buy position, then you won't have any position. Only if you have a position, you will be able to trade. And also, you know very well, in the market, there will be sellers as well as buyers. So you will be acting like a buyer as well as seller in the event if it is filled. In such a situation, you can handle them separately or follow the market reading technique. So once you use the market reading technique, you can identify what sort of moves they are doing it in the market, and based on the type of moves, you can handle the trade at ease. So even if it is hedged, you can handle it at ease, watching for 30 minutes. Thereby, you will be able to continue with your original trade and you will not regret. And that will lead to that of consistent earning from the market. See, ultimately, everybody is interested in earning consistently in every trade, but you should know the methodology of doing it. And you know, market is full of manipulations. In such a situation, the only solution to get rid of that market surprise is to understand which way they are going to do the manipulation. So I had taken the efforts to identify that, and based on that, I'm giving the market forecast. So this market forecast, I explained that they will gain the level suddenly and then start making the high level consolidation and then start making the slide. So you come across the sideways moves in the case of Euro and GBP, and when GBP is making upward spike, then you find that Euro is holding low And when euro is making upward spike, GBP is holding low. That way they are handling the crosses. And they are trying to make the shift in trading zone from the lower level to the middle level. So in the middle level, they are known to make either way stop loss. So you have seen in the case of GBP, they went up to 1.29. That is nothing but a quick upward extended stop and in order to make a slide. And again, they will slowly gain the levels in the middle level consolidation with either way stop loss. Then afterwards, they will take the market further upward as the high level consolidation with frequent upward stop point. That sort of moves they are expected to make from next month. So this week you come across the trending move, but in that you have seen the upward move already, and they are expected to make either way swings. They have made the slide, and they are expected to make further slide in the market, and then quickly make a rise and then drop during that of the US session and firm up towards close. So that is what expected. They are expected to make either way stop loss in the market. Next week is the last week of April. So the monthly trend reversal move is expected to happen 24th to 28th of April. So during that time, the market is going to be very volatile. So keep in mind, you can only do swing trade. You cannot afford to do position trade during that of the monthly trend reversal time. After that, in the month of May, first week again they will make either way stop loss as the monthly trend reversal move. Then followed by that, they will make one-sided upward gain in the market. So follow the timings of the market, which you will not be able to get it from that of the chart or any other analysis. And only by reading the intentions of the players, you will be able to identify that, and then try to do the position trade in the month of May. You will be able to make sizable profit when they are making upward one-sided move. Like how in the case of GBP from that 1.25, they straight went up to 1.29, and that sort of move you will be able to see during that particular time. So after the forecast, we will see the levels in which the currencies are expected to swing. Euro formed the low 1.0603 on the Monday. Then subsequently they are not breached it and went up to 1.0777, and then they are holding around that 1.071. So when they come down to that of the low, you can take a buy, and then they are expected to gain some level before making a drop and hit all the stops on the downside during that of the late European and early US session, and then they will firm up again. Then from Monday onwards, they will make some either way moves. Quick rise, quick drop moves are expected to happen. So you have to be doubly cautious while trading during the trend reversal time. Now in the case of GBP, they came down to 1.2516 and went up to 1.29, and then they are holding around 1.28, and they could come down a little bit or make another 50, 75 pips quick downward move before making further rise. Then in the case of yen, as I told you, when euro and GBP are gaining, they will also gain in the case of USD. So USD came down to 108.14 and started going up. 109.47 they went up, and slowly they will gain the level after the brief downward stop. And now, in the case of Canadian dollar, they came down to 1.3298 on Monday, then subsequently started gaining the level. If you notice that when euro and GBP are gaining the levels, USD CAD and Australian dollar are doing the USD gaining move. When euro and GBP are doing the USD weakening move, that is mainly to handle the cross euro Aussie, GBP Aussie, and also euro CAD and GBP CAD crosses. So they make massive moves in those crosses, by making this sort of moves, by making the USD weakening move in the case of Euro and GBP, and USD gaining move in the case of USD CAD and Australian dollar. So you should be able to differentiate it and what sort of moves they are doing it in the market, what currencies they are handling, why they handle such currencies. If you understand well with the help of the net change and also with the help of the currencies which are making more than 40% spread between the high and the low, then you can choose the right currency and take positions so that you will be able to really capture the profit from time to time. So there is no point in sticking on to one currency all the time, because the players continue to make good moves in different currencies during different time frame. So we'll come to the market reading now. I noted down the initial lows and the highs around 3:30 GMT, and we'll try to compare it now. It is around 5:11 GMT. Euro has not breached the low 1.0707, the high is 1.0721. Then GBP 1.2795. So here what is come across is yesterday's, they have not changed it, and they could change it during the European session, I suppose. And the high was 1.2807, they are not breached both. And GBP is holding closer to low. Then in the case of yen, 109.20 is the low. They just breached it by 1 pip, and high is 109.43. So not a significant move happened here. They are likely to gain the levels in the case of USD yen. They will hold initially when they are making a drop in the case of Euro and GBP, and then gain the level in the case of USD yen. Followed by that, they will gain the levels in the case of Euro and GBP as well. So understand that style of operation, then you will be able to trade at ease. Then CHF 0.9976 is the low, 0.9972 was the initial high. They were just breached the high by 2 pips to 9994 and come below. They are expected to make either way stop-ins. Then in the case of Canadian dollar, 1.3466 is the low, 1.3481 is the high. They are not breached the low or the high. In Australian dollar, 75.16 is the low and 75.32 is the high. They just breached it by 1 pip. And if you notice carefully that Australian dollar all along they have been holding sideways and then continue to drop, and now today they are expected to gain the levels in the case of Australian dollar and drop the levels in the case of USD CAD when Euro and GBP are making initial drop. So they are going to handle all the crosses during that of the European session and then handle the majors during that of the US session. Now the recommended trades, when they make a downward stop, and you can try to take a buy 1.0675 with a hedge order at 1.0640, and they are expected to gain the level by making an upward stop and afterwards during the US session. Then in the case of GBP, again a breakout on the downside, you can take a buy 2750 area, and then they will gain the level to 2850 area, then you can book profit. Then keep the hedge order 2720 to limit the risk. Then in the case of Australian dollar, when they make a small dip to 75.10, you can take a buy and keep the hedge order, and when they start gaining the level, you can use the trailing stop in a profit making position and book profit. So if you've got any doubt with regard to the trades recommended and also any other concepts what I explained in the question answer window here, I'll be able to see the questions, and live I will give a reply. The market timings are given in this chart. You find that every day the market is divided into 3 sessions depending upon the geographical positioning of various countries. Then Japanese, European and the US session, or session 1, session 2, session 3. You can call it anyway. And in between the session, you come across naturally occurring gap time. and they are for 30 minutes between the Japanese and the European, and between the European and the US session. And between the US session and the US Japanese section of the next day, you find that there is about 4 hours of gap time. Each session is further divided into 3 subsessions, namely the early session of 1.5 hours and the late session of 1.5 hours from the start and towards close, and the balance time is the mid session in each of the session. During the early and the late session, they handle the majors, and during the mid sessions, they handle the crosses. So if you want to trade in crosses, look for the mid session and then try to take position, close position during the mid session. We'll be able to easily understand the trend and easily close the position with the profit. But if you try to take it during the early or the late session, then you may have to wait for the next session to come. And next session, mid session, you'll come across the quick move, and that time you can close the position. Here is a question. Will Sunday's European news will be a type of effect on the market? I know you always say it is a reason to make big move. Yes. See, you come across the elections in France, and you know that players are waiting for such things to happen so that they'll be able to make whips or moves in the market. And you know that how they have been creating the bearish field in the market all along, and then started gaining the levels in the case of Euro and GBP. Why? What has happened to British exit? Or anything significant has happened for GBP to go up? No, simply they create the hype out of that. So Sunday election results, they will use it for a gap out. And the gap out could be a downward gap out in the case of Euro and GBP on Monday, and then they will start recovering the market. I think you got the answer. Fine. Yeah. Any other question? Okay. Do you think gold will gain levels during May, and what levels? Yes, gold is also expected to gain levels in the month of May. You could come across easily gold going to 1300 and above. Any dip is a great buy opportunity in gold. They may use various terminologies like safe haven strategy in the event of uncertainty and all those things. Ultimately, after accumulating buy position at the lower level, they are compelled to rise using every trigger to book profit at the highest level. So the gain is inevitable in gold because they have accumulated huge position holding low. Any other question? So I will try to review the forecast again for those who have come late. Today they are expected to make the swing and slide in the case of Euro and GBP, and then quickly rise during the European session, and then make the downward move during start of the European US session and slowly firm up towards close. That is what expected to happen in the market. If there is any question, you can answer it. Ask the question here. I will be willing to answer those questions. So the range I mentioned. And also keep in mind from next week onwards, for 2 weeks, we'll come across the monthly trend reversal moves. That is end of last week of April and the first week of May. So do only swing trade during that time. So are they doing pump and dump move in the case of gold? Yes, they will pump up very quickly, and then after gaining to the extreme level, they will dump it. You would have noticed last week how they gained quickly in the case of GBP towards late European session, a quick upward spike to 1.29, and in fraction of a second, they dumped a huge position and it came down to 1.2822. That is how they do it, using a specific type of order in the market. Afterwards, they are not reaching 1.29 at all. No? Because they know very well when they do that way, the quick upward spike, all the stops which are placed at the higher level of the short sellers will be closed, and then afterwards when they drop, the traders tend to take a buy. No, why they are not raising it now? Then traders think that okay, the resistance is breached and the resistance turns support, so they try to take a buy. They hold it and slowly just breach the psychological level and give that impression to the other traders they are all buy levels. Then afterwards they will make one drop and hit all the stops on the downside. So if you follow the market sentiment and try to take positions, they may simply say trend is your friend, but that will happen to be your enemy. Okay, no more questions coming up. Okay. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Monday, 24th of April, and try to give you the forecast for the last week of April and try to trade at ease. Don't be carried away by that of so many news and rumors that players create in the market. They are all mainly used to distract the traders, and the players use them as only the triggers for the market pick upward or the downward move. So if you are in the right direction, such moves you can capture very big profit rather than stopping out the positions. So if you want to do that, you know very well many of the traders stop out during the gap out. But if you want to really make good profit, then you need to read the intentions of the players and not the charts. So wish you all the best in your trades. See you on Monday.